Now, today we're talking to Chris Hynes, a man who runs the UK operations for Wealthi, with an I, a property investment company. Wealthi uses cutting-edge machine learning technology to simplify property investment and make it more accessible to all, and with the national average property price in the UK hitting record highs. It's an important time to open up market opportunities, so I'm delighted to welcome Chris Hynes to the studio. Chris, good to see you here on The Money, Startup Britain. Tell me what Wealthi, with an I, does.
Well, what we do in essence is sell investment property across the UK. And we want to make that process as simple and easy as possible, really. When you look at a property that you're going to purchase for a personal basis, if you're looking at a house to move to, or if you're looking at a rental property, you go to your Rightmove or you go to your Zoopla, and that's your platform, your trusted source of information that's going to have the property that you're looking for. So what we want to do in essence is create a platform for property investment where people will go to that platform and be able to search through different areas and fine-tune, essentially, and fine-tooth their investment opportunity that suits their needs, in essence. So really trying to create a platform that will cater people's needs, what they're looking to achieve from their investment, be looking for greater capital yields, or capital growth, or looking for greater yields, but trying to identify what they're looking to do and make that process as easy as possible.
Now, in the last 15, 20 years or so, we've gone from a situation where about 10% of households rent from the private sector. We're not talking about social housing here. About 10% of households rent from the private sector. It's now about 20% of households renting from the private sector. Of course, home ownership has gone down in the UK. It's still very high among pensioners, but it's pretty low among people, with all respect, your age, a little bit older.
Definitely.
But what you're talking about here isn't really homes to live in, is it? You're talking about homes to rent out. And it's pretty true to say, while there are people with huge buy-to-let empires, there are an awful lot of people out there, not particularly wealthy people, who have another property to rent out because they think pensions don't work for them, they think pensions are bad value and overtaxed, so they have put their money over the years into one. I think the average buy-to-let renter owner has like 1.4 properties, i.e. most people who have buy-to-let have just one. It's very, very few people with a big portfolio, isn't it?
Definitely, it very much is. And like you mentioned, with 20% of the UK market being made up of that social housing component, I think it's about 1.5 million households at the moment that are currently, on that wait list from a social housing perspective, which is fascinating to think that's 1.5 million households, not to say individuals. That could go up to that 3-4 million person mark, but really trying to get more people involved into the property investment world. Obviously, there's a shortage of houses at the moment, and that's something that we've identified, and I've heard you talk about that in the past as well, but there's a need to address that side of the market as well. We need to address the social housing. There isn't enough social housing at the moment, and there's too much of a wait list. But then looking at diversifying people's portfolios, as you mentioned, people buying investment properties as a pension solution as well, but also trying to create wealth for themselves. And that generation rent is a massive scene at the moment. I think it's about 18.5% of the UK are currently renting property. And they're people that, I can imagine would want to be getting on the property ladder, and we want to be making that as easy as possible for them through an educational platform, really, being able to provide them with the education they need to be able to make their investment, which one day might help them get on the property ladder themselves and buy a residential property. But we're looking at from that angle, you could say. So being able to purchase these investment properties, build up some equity in the property, and then be able to buy a home of your own in the future.
So if I wanted to buy a buy-to-let property, perish the thought on journalist wages, but say I wanted to buy another property, what would your website offer me? What does Wealthi, with an I, offer me that I can't just go to a regular estate agent, peer in windows, do my own research? What is it particularly about your company that makes it, in your view, special?
Definitely. Well, we're a very tech and data-driven business. We analyse the numbers and do our due diligence on these properties. So we've done the research for you. We've provided you with, let's say there's 3 options that suit what your needs are and what you're looking to achieve with your investment portfolio, and we'll do all the research for you. So we'll work through workshopping sessions where we'd identify that, let's say Liverpool, that's not going to work for you, or Birmingham, that's not going to work for you, and identify what will work for you, and then we'll present you with those options and essentially do you could say, discovery of these properties, working through that process with you, and being able to identify which property is going to suit your needs best.
And who I mean, who actually pays? Do I pay as a buyer? Do I pay you? Or do the mortgage providers who you hook me up with pay you? Do the lawyers, the conveyancing professionals, the surveyors who you hook me up presumably with pay you? How's it work?
So we're paid by the developer. So there's nothing nothing our clients would be paying. We're paid on the delivery side of things. So once the development's completed, and we've sold you the...
So you're only really dealing in new build, right?
Exactly.
You're not... OK, that's right.
Yeah,
well, that's
so
a huge market here.
It's a massive market. And as we've seen over the last 12 months, there's now a fight for quality. You could say people want to be in nicer buildings and nicer apartments, newer houses. And so there's been a real fight for quality in that sector, which has obviously driven up demand for new houses, new apartments. And the rental market at the moment is going absolutely crazy, you could say, 8.7% rental increase in the last 12 months. And I think we'll continue to see some very strong rental increases in the next as 2022 comes around.
Now, I've looked at lots of housing developments in recent years. I've made documentaries on the housing industry. I've wrote a book on housing, as you probably know. And there are some really good new build developments around there in the UK. I mean, there are some firms I could mention, but I won't, who do have a deserved reputation for very good quality new build. But I'm afraid there are others, Chris, that have a very bad reputation, equally deserved for new build. You know, we're building the smallest homes in the UK by square meterage of any decade since the 1920s, because land prices go up so much. How can we drive up the quality of new builds so they meet building regs, so they have proper fire insulation, so they have decent-sized rooms? Because none of those things are a given in recent years.
Of course. I think there needs to be rules in place from the, you could say, the policy side of things, that these developers have to be hitting a certain criteria or certain level with the quality that they're delivering. As you mentioned, there are a lot of dodgy developments out there, and we try and stay clear of those as best we can. But I think it comes down to the developer themselves. How strong is that developer? How established are they? What's their track record? And that'll really help us understand which developments and developers we should be going after really at the moment, so we avoid that issue later on down the line with safety issues and damages in the property or defects and whatever it may be, but really looking at the higher end of the market, you could say.
Yeah, I'm not for a second casting aspersions on your company. From what I've seen of your company, you're dealing with very reputable developers and sort of the middle and higher end of the market. But it did really strike me as astonishing, Chris, when I discovered, and I'm ashamed I didn't know this until just a few years ago, a lot of new build developers, they make it a condition of sale that the person buying the house isn't allowed to do their own survey. It's part of the sales and purchase agreement. That's astonishing. This is the biggest purchase the majority of people, if they're lucky enough to buy a house, are ever going to make in their lives. And new build developers now, they're so powerful, there's such a shortage, they can say to the buyer of a new build home, we're not going to let you do a survey, take it or leave it.
Yeah, I think that is pretty ridiculous. I think something needs to change there.
Yeah,
I think there's a few things within that property world at the moment that need to be addressed. A good point that you pointed out in your book around the housing shortage was the point around the rules that's in place for right to buy with social housing following a social housing development, for example, and the fact that the tenant can purchase the property back for an extremely reduced rate, and then the Treasury will take 75%, I believe it was, from memory, of the money back from the deal themselves. And it's not really recycling the money back into the market itself, into that social housing market. And I think there needs to be a rule change there as well. I think that's going to be an interesting thing to watch over the next 12 months, and as maybe policies change. And then I think there needs to be something addressed within that social housing world, but you're definitely right.
Let's just go back to Wealthi with an I. That could be your catchphrase. You can have that for free. Wealthi with an I. There you go. You can have that for free. PR companies charge a lot for that kind of insight, you know.
We'll take it.
Let's think about Wealthi with an I. Who's your target audience? Because your target audience clearly isn't somebody who's just desperately trying to get on the property ladder. Yeah. A young couple working night and day to try and buy their very first one-bedroom flat with no garden in a terrible part of town. Your target audience is slightly different, right, Chris?
Yeah, it certainly is. We're targeting, you could say, more that 25 to 40 age group.
Yeah.
It's where, you've got a more established job now, you're more established in your life. You could say you're ready to take the next stage in your career. And people within that age group have, a large accumulation of savings as well at the same time. So we're looking to diversify their portfolios. Maybe they're in some cryptos at the moment, some shares, whatever it may be.
Yeah.
But diversify their portfolios and help them get into the real estate market, get their foot in the door, and really make that process as easy as possible for them.
Now, property is an interesting investment. It's gone up a lot, not just in London and the South East. In fact, during the pandemic, the fastest price rises, as you know well, Chris, have been in the Northwest,
Definitely.
in the Southwest, in the Northeast. We've seen some pretty hefty price rises in parts of Northern Ireland as well, part of the UK, which has lagged. But the government doesn't like it, does it? It's making it increasingly difficult to have a buy-to-let portfolio. It's taxing landlords, even somebody who's just got one small house that is their pension.
Yeah, definitely. I guess there's been some slight changes, especially since the Section 24 a number of years ago. And now you're seeing more and more people purchasing investment properties through a limited company, for example, which is helping with the tax implications of buying an investment property. So I think that we're going to see more and more people moving down that angle.
So set up as a company and buying property as a company rather than as an individual.
Exactly.
But won't the government will see that as not tax evasion. Obviously, it's not illegal. They'll see it as tax avoidance, which is completely legal, but then the government can change the laws, not retrospectively. But don't you think the government will close off that option?
I think for now, we've got a couple more years before they will close off that option, if I'm honest. I think that there's still a lot of activity in that market. Obviously, inflation's high at the moment, sitting, about 4.2%, and they're trying to control that as well. So
those stamp duty can be higher if you're buying a property with a corporate structure, right? That's already
there. In some instances. I guess the limited company structure will work better for some people than it will for others.
Sure.
You could say.
And we're not here giving tax advice.
Exactly.
We're shooting the breeze.
Yeah. So it really depends on the individual.
With all respect, Chris, you're obviously a very smart guy. You're working in business, and good luck to you.
Thank you.
But you're a relatively young lad, if I may say so. What have you learned about the UK property industry that surprised you in the years that you've been doing this? Both surprised you pleasantly and has also surprised you, to be fair, unpleasantly. But let's do pleasantly first.
Let's start with that.
I
guess it was a slight change coming from Australia. I spent the last 10 or so years in Australia. I was working in commercial real estate at the time, and then coming across to the UK, which was, it's a more established market. You could say we're you guys over here, or the UK itself, are about 50 years, you'd say, more advanced than the Australian real estate market. So it was really adapting to, or working in London more so, but adapting to the way in which deals were transacted and looking at the markets that were moving more rapidly as well. So in London, for example, the market between the £1.5 million mark to the £4 million mark was a very strong and buoyant market, and during the pandemic showed great resilience, and it's where the majority of the transactions were happening. In Australia, you could say it's very opposite, the opposite to that.
Much smaller country, with all respect.
Exactly.
Pretty good at cricket, but
exactly.
A much smaller market.
But I think that, the UK...
So we're more dynamic, but what shocked you about property here? What do you want to see change? Not, be above and beyond Wealthi, which the business you work for, what do you think should be changed? Just as a young person who's working in property, not necessarily as somebody in business.
I do think that we need to help younger people get onto the ladder at a younger age. I think that's a massive issue in the UK, and the fact that affordability is a massive question over here as well. Average house price in the UK now, I think, sits around the £330,000 mark.
8 times average earnings.
Exactly.
8 times
That's
average
incredible.
annual earnings. Even more, 9 times. Traditionally, that's been 3 or 4 times. How can you get a mortgage? If you only get 3 times your income on a mortgage and there are 2 of you, and then you're paying childcare, maybe?
Exactly, and it all adds up. Your rates are expensive in London, for example, at the moment. Your council rates are going up more and more as well. So I think there needs to be an approach from an affordability standpoint, helping younger people get on the map. There's platforms coming out at the moment, or startups like ourselves, Generation Home, to name one of them, where it provides the opportunity for, say, I wanted to invest in a property in London, but I could call up my mother or my father or you, for example, and say, all right, do you want 40% share in the property?
I see.
And we split the ownership of that property, and you benefit from
there's more and more of that going on.
So...
Well, look, it's very interesting. We've had many people on the show talking about property. We've had Generation Rent. We've had the YIMBY Alliance, Yes in My Backyard. It's very good to get your perspective too. Chris Hynes there from Wealthi. with an I.
Love it. Thank you very much.
Thank you to Chris Hynes, Head of UK Operations at Wealthi. Lots of you have been writing in about strike action. Our earlier discussion, is the UK facing another 1970s-style winter of discontent? Terry says, I worked in security for years. We were always treated differently to company staff. It's nothing to do with race. Security's always been poorly paid as our employers make all the money and then pay us the minimum wage. Gareth says, if places like Tesco can pass on wage increases of 4 to 5%, more people will want higher wages. I'm a pensioner. We'll get a mega 3.1%. I think mega there is being slightly sarcastically used. Marjorie, she says, unions and Labour seem to expect the private sector to organise themselves in a manner to produce the money they want. And Stephen emailed us. Government workers have gold-plated terms and conditions. Take the fire service. The option is to retire at 52 is common. God, I'd be a pensioner already. But don't get that in the private sector. The private sector pays the public sector's wages and pensions. You've been watching On the Money with me, Liam Halligan. Thanks for joining me today. I'll be back. More economics, business and consumer news tomorrow at 1. I'll be back in a minute with Gloria De Piero. Who's she? This is GB News. I'm Liam Halligan, and that was On the Money.
It's time to remind ourselves there's always another winter. Canary Islands sponsors the weather.
Hello again. Storm Barra has arrived and it will bring disruptive winds to large parts of the UK today, along with hail snow for parts of northern England and Scotland. Barra deepened rapidly during the last 24 hours and it's now pushing into Ireland, where red warnings have been issued by Met Éireann because of the really strong winds expected in the south and the west. For the UK, the winds aren't expected to be quite as disruptive as Storm Arwen, but still they are likely to cause some issues as gales push east across the UK, heavy rain moves in, and we're going to see a spell of disruptive hill snow above 200 metres for parts of northern England and Scotland, potentially affecting Transpennine routes, the M80, the M74, for example. Blizzards over the higher ground of the north, drifting snow as well. The winds really pick up through the day and they're going to peak during the evening across parts of the Irish Sea, in particular West Wales, for example, seeing gusts of 80 miles an hour as these showers push through following the main band of rain. A very blustery night to come. Less cold compared to last night, but only because of the strength of the wind stirring things up and the extra cloud in the sky. Showers continue and longer spells of rain in places as we start off Wednesday. Storm Barra still centred over the UK, but by this stage